Hi, this is Shane with the Rational Trader. It is Tuesday, the 19th of June. We had a 120 point overnight range last night. And typically speaking, so we use that as a way to help us understand what level of volatility to expect. And when it's more than 100 points in the NASDAQ, that's pretty much stand aside territory. What the data actually shows is, first of all, if you start at 6:30 or 6:35 would be the normal start time, you basically just get killed. What we did from a machine learning modeling perspective is we changed the way we model for these really volatile times. But then we also discovered that you just really have to let the market settle down. And ultimately, the guidelines came down to starting at 7:05, so 35 minutes after the open, when it's more than 100 points. And even then, it's basically a coin flip. If you're going to, get killed, take a max loss that day, or stay in the game and do, you can do pretty well because the volatility means there's a lot of movement. What I've been doing recently is working on a way to help the systems understand that the markets are choppy and sideways. And choppy and sideways can mean either that it's quiet and there's not a lot of direction, or it can mean the market has made a significant move and is now kind of digesting that. And the method that we've been using for understanding if the markets are choppy uses a moving average, which is very laggy, so it takes a while. And here's a good example of that case where you have a sharp upward move, the market starts to go sideways, and you really want to get out of the way until it resolves itself. So when I look at this, what I see is the market's moving up. That first pullback, I'm willing to go either direction. Same thing here. There's a very clear movement here. But as soon as we set that point, that tells me, okay, I don't want to go long anymore. I want to wait and see what's going to happen here at that level. And then you set that point, and now you get the same thing on the downside. And so just taking that concept, and what I've built is this method of avoiding the chop. And what I found today on what I expected to be a very volatile day was that that by itself does an excellent job of just keeping me out of trouble, even when the markets are pretty volatile. So normally I would either stand aside or start at 7:05 today. Today I went ahead and started at 6:45, and I really like what I saw in terms of just staying out of trouble, staying out of these places where the market is chopping around now. And then when it gets into free space, taking trades. Today I ended up down $50. Where is that? Right there, down 50. But you'll see actually that as we go through this, that there were a couple of cases where just the stops were just too tight. But I really, in terms of what I was trying to do, it's spot on. So let's walk through this and we'll see. Okay, and we're going to pay particular attention to how the system goes. All right, stop taking trades. All right, so when you see a black background, that's okay. I didn't start trading until 6:45, which is right here. All right, and then but let's examine what we see here, because just from a training perspective, the market moves up sharply and then starts to go sideways. Now the moving averages are all saying that you're still in an uptrend. You keep taking trades. All right, but again, as soon as we set that second point, I'm not going to go long. That's why this goes blue here, this area right here. And then as soon as we set that second point, that's there's now a low level, and it goes red. But since it's red and blue, it actually goes purple. That's what this is here. This is why it's purple. All right, and then what you see is very briefly right here, this bar right here, the background is only red. That's because for just a moment you would take a long right there, just because of the distance that the market had traveled in this direction. It's now safe to try to get long. So the basic idea is, if you think of a range like this, the market's trading in a range. Okay, what we want is we want to stay out of this. We especially want to stay out of the middle. Okay, that's just death. All right, but if and we don't want to get long up here, and we don't want to get short down here, because there's an expectation of rejection there, or rather, it's quite a bit riskier. You just don't know what's going to happen. It's got to either, for the long side, it's got to break out, and then now look for that pullback, right? Or if you get all the way to the bottom of that range, now I'm willing to take a long down here, because there's enough room to get me back to there and scratch, and then if I get the breakout, I'm in a good spot. All right, so that's what's happening right here actually on this bar. So you've gotten far enough away from this last point that we set that it's now considered, okay, if the long sets up, I'll take it, because there's enough room there to get me in. And basically I just want to get to scratch is all I'm trying to do, and then we'll just see what happens. Instead, the market goes sideways here. It sets another low level. I'm willing to take longs here. You'll notice it's when we briefly came back in here, we're now inside this range, and so it goes back to purple, because now it's blue and red. It's blue again, meaning I won't take longs. I'm too close. I'm considered too close to this upper bound that I've set. Now I define that amount. All right, and in this case it's defined as 40 ticks. So that number probably adjusts with the level of volatility. So quieter markets, you would reduce that. Well, more volatile markets, you'll increase it. But ultimately, it's also about how big a stop you're using, how much you're willing to risk versus what's the expected reward. So if you're using a 10 tick stop, to me it's not worth it if the expected reward is only 20 ticks. I need to see more than that, just given the relative unpredictability of the market. Okay, so what we see here is I'm actually not getting any predictions in here, though I would have taken them given the way that these points are setting. Right, there's a very clear difference in levels between highs and lows, and then we break lower. I would have loved to have seen a short right in there, but it was clear to me that the order flow looked odd to the machine learning system, and it might be related to the fact that this big overnight move kind of came out of nowhere. What we see here is these codes here are very aggressive ones they're too aggressive to take. We're also now inside a blackout that's around the 7 o'clock time. So I'll black out 2 minutes before and after. Usually because there's news, but even I've noticed when there's not news, it will still get volatile right around at the top of the hour. I think that's related to program trading that kicks in. It's a little unfortunate because these are short signals here. These are very nice shorts, for a quick move there, which I end up missing. Okay. Market starts to go sideways again here. So you can see the background striping now as the system starts to get selective about what it's willing to do. You'll also notice these are big moves. These are not small moves. So these are dangerous waters for the small account trader. There's a beautiful 141 right here, which is a break higher right there. Okay, but I didn't get filled. The market just took off. Okay, so I missed that one. The background here is red, all right, and that's because these points are very close to each other, all right, in space, in distance this way, in price, not in time, all right. So this level's been established, and so the system goes, all right, well you've got a level to the downside we would need to respect, and then it happens again actually right here. So there's still this here. I wouldn't take any shorts here, but I'm willing to take longs. I get a clean long signal, just didn't get filled. Here, start chopping sideways again, so you can see as soon as we get that point, this goes blue. I won't take longs, and as soon as we get that one, it goes red, and since it's still blue, we get purple, so I won't take anything in here. Just standing aside now. And then once we kind of break out, we start, the background goes black, so we'll take trades if we get them, but you can see the market is really whippy here, really volatile. That's 76.86. That's a 16-point move in 2 minutes. This is pretty volatile, and then again directly the other way. All right, and so again you're seeing this blue striping because this level up here is close enough to that one in space, the previous one in distance, that it goes, okay, well, you've got a level here you need to respect. All right, so once we get far enough away, it opens up. We would take longs through here, but we won't take shorts, all right, because of that. All right, that's too close together. That's why this is red. That's how does that work out? 254. I'd get stopped here if these are short signals. I'd get stopped here if I took this short. I can't because my chop avoidance says you're too choppy to short here. This one, I don't think I may get filled. All right, but I'll scratch on that pullback. So I saved myself a loss there basically. Here, I won't take longs or shorts, and again you can see the chop happening here and here. Let it break out. All right, that's actually a long signal here. That says that this break here is going to fail. That prediction is wrong. I wouldn't take a trade there anyway because I require an up bar and I don't get one. It just keeps falling. But nonetheless, the chop avoidance wouldn't let me take it either. And then we open up here. All right, we get a clean long signal there. Get in right there. It doesn't do much. We're trailing by 20, and so we make a little bit, not much. And then because of this level gets sat, that says don't get long. That's what this blue striping is. But and a short shows up off this break, so we break lower here. Short looks okay. We get enough to get to my trade management is get to 10, move to entry -5, so I lose 5 ticks there. And then the same thing happens here. I'm still willing to take shorts. I won't take longs because this still looks like a level. All right, and I'm far enough away now from. Actually, the low level, these low levels were spread apart far enough that you don't have a level there you need to worry about. So I'm willing to take a short there. It's the same thing. I get just enough to move my stop to entry -5 and then take a 5-tick loss. We then break free here. That's considered too aggressive of a code. Here's what I'm talking about in terms of just the volatility in the small account using stops that are too tight. We break free, clean pullback, very clean long signal, get stopped out to the tick. All right, so this is just life as a trader. You can see the market just popped from there too, just the way these bars are drawn. So take a loss there. Again, it's life as a trader in a volatile market. Very much sideways here. As a human, you can see that very clearly. The market's going very sideways here. All right, so you see the striping come in. Won't take shorts, won't take longs, won't take both. And again, the moving averages are all still saying, hey, there's movement in the market. Go ahead and take trades. And so that's, in the past, has been the problem on a day like this. And whereas at this point, I'm still alive as a trader. I've taken two full losses, right? 2 halves and 1 full loss. I'm only going to take 3 full losses. There was a small gain in there somewhere. And then let's see. Again, it's very choppy through here. You can see that. I get, things open up because of the way this breaks higher. I get a short here that just scratches. It makes a few ticks. All right. We fall. We get in right there. We fall to there. There's just not much. There's no movement. The market is really still actually sideways, and we see that actually as these points get set, and you can see the striping come in. all right, here and here, and then we go, you know, no longs, nothing, no longs or shorts, and you know, until we break out of this. And so we're just ignoring all this ugly choppiness, choppy ugliness, and you know, it's really helping in terms of, you know, days like this where you're either, you know, you usually just getting killed right away and you're done, or you catch some great move right off the bat and then you're able to withstand the whippiness. Again, very sideways here, staying out of trouble. It opens up a bit as this, you know, that strong move down, and kind of frees you to get long and short. No signals though, which is a little unfortunate. You would have liked to have seen like a pullback signal right there. That's what we'd have been looking for. This is the other one that's just kind of where you go. It almost feels like the market's out to get you. It's not. It just feels that way. This is a 286, which is a short. And you'll notice that it's blue on top, but it's not bright yellow on bottom. What that means is that I'm now outside of the range of time I'm willing to trade because I stop at 9 o'clock. I'm just staying out of the doldrums. So I trade from 6:30 to 9 is the range, or 6:35 to 9. Today was 6:45 because of the volatility. In this case, this bar is a short, and the entry would be right there, which would be super sweet. And I end up missing it simply because the bar is 26 seconds late finishing drawing. So after 9 o'clock I stop. So this is kind of what I meant, where these days that are super volatile, in the past it was either don't just stand aside or start at 7:05 and flip the coin, because you're either going to get killed or you got a shot at something. Watching what happened today, what I felt like this wave-based chop avoidance that we're using, you know, getting data from the machine learning system, is really helping you kind of stay in the game. And you can see I had a couple of shots there. One right here, which is a little bit heartbreaking, just because of the timing, and then the other one where I just got stopped out to the tick right here. There's a nice little profit there that I don't get because you know, just life as a trader with trading with too tight a stop. Okay, so pretty pleased by what I'm seeing there. I'm not sure what tomorrow will bring, but I feel like I'm really prepared for it, even if it's super volatile, given kind of the way we're looking at the market now.